This is the Self Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Myers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self Storage Podcast. I'm your host, Scott Myers, and this week's guests are Rod and Christin Blunk. They live in Annapolis, Maryland with their 3 daughters and are pursuing self-storage opportunities in the Mid-Atlantic and Southeast areas of the country. They've been investing in real estate since 2012, and they have amassed a portfolio of both commercial and residential properties. They flip roughly 6 to 8 homes per year. They've wholesaled 300-plus residential properties. They currently own 4 office buildings. They're equity partners in a new ground-up storage facility and part owners of both a general contracting company and a real estate investment company. They've been students of ours for a few years and have graduated from our mentoring program into our self-storage mastermind, and they have brought a great deal of experience to the group as they continue to now grow their self-storage portfolio. So without further ado, please enjoy this wide-ranging conversation on acquiring your first self-storage facility and then how to scale and grow with Christin and Rod Blunk. Hey, Rod and Christin, welcome to the show.
Hi, Scott. How are you?
Hey, Scott. How you doing?
We are doing fantastic over here, and so glad that we were able to catch up. You know, the folks here at on the podcast have not had an opportunity to hear about your story. We've all heard it at the mastermind, but what I wanted to do is to interview you and talk to you, or have you talk a little bit about the most recent deal that you've done. Just share some of the challenges you went through, how you found it, kind of walk us through that process step by step. But before that, if you would, I gave everybody a brief introduction to you and a little bit of your biography, but why don't you expand on that a little bit, fill in the gaps, and then let us know what you've been up to recently, and then we'll dive in.
So I don't know how far back we want to go, but Rod and I were, W-2 employees way back when, and trekking along a great path, great careers. And then when the market crashed, 2008 timeframe, we were doing what we thought we were supposed to be doing and investing all of our money in, stocks and mutual funds. And, we had a house and we had cash, and then everything else was in the stock market. And so we kind of took a downturn with everyone else. And fortunately, we didn't need to access any of that money at that time. So we were able to ride it out. But in 2012, I took a closer look at everything and realized that we still had not broken even from that crash. Not to mention all of the earning potential that we had lost for, that 5-year time frame. So then I started thinking, gosh, there's got to be a different way. What we've been told is not going to get us to where we want to get to. And I just started researching, and Rod started researching. And just like every investor, I think, starts out with the Great Rich Dad Poor Dad book, and their mind shifts. It opens up possibilities and just ways of thinking that you had never thought of before. And so that book started, churning our brain and figuring out how we can do this. And so we got, some education, and we started off fixing and flipping. We bought and hold residential properties. Obviously we were getting a lot of learning through doing, but we also had some educational classes, which were great. And then I think around 2015, 16, we were doing great. We were wholesaling, fixing and flipping, buying and holding, a lot of work, a lot of active income and hands-on. Rod got sick and he was diagnosed with cancer. And so we had a year of really not being able to work in our business, but to take care of our health. And it kind of reset us. And our priorities. And so we had established some goals that we wanted, and in the future, God forbid, hopefully it doesn't happen, that Rod's not able to work. We just wanted an easier way of passive income coming in so that our life could be a little bit easier and we could sustain what we have. And we started looking at the number of residential doors that we would need to do in order to make that happen. And being a landlord, when I saw that figure, I said, there is no way I will do this because it's going to take us too long, and I don't want to manage all the tenants and the houses and everything that goes along with it. So we just started looking into other avenues, commercial real estate. We own 4 commercial buildings. They're multi-unit buildings. There's probably about 60 units in them. And so I have a little bit experience in that, but really wanted, I shouldn't say hands off because nothing's hands off, really wanted an asset class that we felt would fit what we were trying to accomplish as far as the passive income and the active portion of it as well. And we landed in self-storage. Tim Kane, who is one of the mastermind members, I've done a lot of deals with him in the past, and we were talking and he led me to you. And I'm so thankful for that. So we started educating ourselves a little bit, I think, after COVID hit. And then I think it was about a year into that when we got our first deal in self-storage. So, and that's where we are today.
No, two more.
Oh, and we have two more under contract. Hopefully one we're settling before the end of the year, but we'll see.
And as we've said, once it may take a while to get the first one, but then number two and number three usually come pretty quickly after that, after you've built up your resume, if you will, your team. And when the marketing is already in place and you've filled your funnel, then it's just a matter of time. And the others come behind that. But, one of the things I wanted to touch on and have you expound on, there's a whole lot of folks out there that, well, for whatever reasons, I think fear is the number one roadblock for many people to get into the business anyways. Either unfounded fear, thinking, oh, I can't start right now because of the pandemic, or, there's a recession coming, or everybody's getting into it now and I've missed the train and there's no good deals left. And you stepped into the middle of all of that. I mean, you arguably stepped in what could be considered, one of the most difficult times to be able to go out and find a project. So let's talk about your search, how you began your marketing, the process, and what you were doing to be able to source the deals that the first one you closed on, as well as the other two behind it.
Sure. So I have a background in wholesaling. So I was very familiar with marketing strategies and what to do to how to tap into finding seller leads. So with that, I felt confident that I could, find our deals that way. Obviously, we looked through agents and brokers to find deals that way, but where I found all of our properties, and it took a while, and that's the biggest hurdle to get over, right? So you're in it for a year. It took us almost a year of fine-tuning our processes, getting educated, doing everything, and doing the day in and day out work to get our first deal. And so a lot of people get frustrated. A lot of people quit because it's not fun every day picking up the phone, calling and being told no. Oh. And probably like most other people, my patience is very minimal. And when I want something, I want it now, right? So through going through that process, it's challenging, but I knew what I wanted and I knew we were going to do it. And we were fortunate enough to be surrounded by wonderful people who we've been introduced to through you, who've been there, they've done that, they know what they're doing, and you have a great support system and a great cheerleading system to get, to get there and to get it done. So this, I think, it was one of our challenges, is why it took us so long, is Rod and I both felt that we wanted our first property to be within close proximity, driving distance to us. And we're in the Middle East and Maryland, there's a lot of places, most of them are Class A, REIT type self-storage facilities. And we're not looking to buy those types of facilities. We're looking for, the mom and pop B, C class facilities where we could do the value add. So once we finally got a comfort feeling that we can do this outside of our territory, we expanded into other states. And that's when I felt like we were having success. Would you agree?
Yeah, I'm going to say a lot of the feedback from just the various folks we're in various conversations with, and me with your group and others, Scott, is just the confidence of saying, well, I'm here. I'm over here. Well, yeah, want me to go take a look at that for you? And having that ability to leverage relationship with others in the self-storage who want to help, who've been there as well, who've already blazed some trails, that really kind of opened their eyes a lot more to, we can actually get outside of a 1 hour drive, 2 hour drive. So now we're an air flight. Now we're air flight plus 5 hours or something like that, and have the comfort factor. Well, the deal's the deal, and it fits our portfolio and what we have for our boundaries and what we're going to buy. Then it's doable. Depending on Utah, depending on Kentucky, Tennessee, Arkansas, which are obviously not a driving distance.
So once we got over that roadblock, I felt like that helped us move along at a little quicker pace because we had a lot more opportunities that we could evaluate and do. So we started marketing in those areas. And when I marketed, it would be, through letters. My letters weren't very successful though. I hired a virtual assistant and they pounded the phones for me. And they were wonderful. I would get leads coming in every day. And then I would personally follow up with those leads. And I will tell you that buying a self-storage facility, the turnaround time and the response time is a lot longer than buying residential properties, right? I mean, I could go to a house and buy it in 24 hours if I was paying cash for it. But that's not the way with self-storage, right? And a lot of times you have to cultivate, you have to date the seller, you've got to build that trust, which is an important factor, right? And so once we started putting our tentacles out there and started making the contacts with the sellers, it was really building and maintaining those relationships for them to eventually, when the time is right, come back to us and say, we're ready and we really appreciate you because of we really trust you. You're honest. We talk. You're friendly. And Rod was dating a lady. Was she?
She's still good. She's a great lady. I mean,
yeah.
I'll tell you in my own personal experience of this. Again, I'm not 100% yet. I still have the W-2 until we've got that deadline. Just a side note, the deadline of December 2023 when I'm done with the W-2 and doing this full time. But I see it as for us. It works great as a relationship. I'm a relationship person. I can hold a conversation anywhere from farming with pigs to building nuclear submarines. So I enjoy that. And I think like Christin said, it's the comfort factor when you're trying to buy somebody's child that they raised to be in the self-storage facility that they've bought and they've nurtured to what they want, or that they're ready to get rid of the ugly stepchild because they're done with it because they just were doing other things and didn't have the time. But you learn so much from that person and taking the time that don't be the person that says, I have to buy it tomorrow, like you would do in residential. Be the person that wants to be in there with the long haul so that the confidence is gained and you learn everything you can from that individual who wants to sell. But it's not that you're trying to pull the wool over somebody else. It's just, I'm transitioning your baby to me, and I'll take care of it for the rest of its life, or until I'm ready to transition to somebody else who's ready to go through that venture. And I think that's a different way of looking at it than you would do in a traditional business transaction. Yep. So, as I said, is when you have that ability to talk that different scenarios or discussions, which I thoroughly enjoy, I'm sure everybody that knows me knows that, it makes you feel like you can just be a friend with the people, and which I want to be their friend first, because that way I gain more confidence. And at the end of the day, we're not trying to buy a business in one day. We're trying to build a relationship to transition a business from one person who's taken as far as they wanted to and giving you the opportunity to take it further. And that's a lot different than a lot of these other businesses. And at the end of the day, they're happy when they sell it. They're happy it's going. I mean, all the people we've talked to are transitioning, especially as Christian mentioned, my girlfriend that I've been talking with for over a year on her facility. She's had that with her husband who passed away, and she took it great lengths, and she is so happy to be talking with us because she knows that we're honest and we're not going to go and do anything else. We just want to keep it and grow it. And it makes us feel good when we walk away at the end of the day, especially when we walk away with the deal at the end of the day.
So
a couple of things I wanted to touch on, if I could, Kristen, a couple of points I wanted to make that you both had mentioned, and that is, one of those, the mind shifts, one of the greater mind shifts that I think I had when I came into self-storage, much like you, Rod and Kristen, is when I was in single family houses and apartments, and we just had to be close. You had to keep an eye on things. You had to keep an eye on the buildings, the tenants, the property managers that were managing it, the contractors, and everything else. And so just never wanted to be within an hour and a half to 2 hour drive of any one of my properties. And then when I get into self-storage, it certainly started with that, looking around within a 2 hour drive of home base, if you will, in my office. But then recognize there's no emergency that has a sense of urgency like, habitational real estate, because pipes burst and people fight and they park on the lawns and they blow off their fingers with fireworks, and you have to, answer to calls all the time. And with self-storage, there's no people living in it, and there's no pipes. There's just no emergencies. There's no sense of urgency. And so, like you in the beginning, we recognize that any facility that we purchase, it's just a plane ride away. It's 25 minutes to get to my airport and then an hour plane ride away. So what's, not much of a difference. And there's really not a need, to always just look for something close to home, especially if it's sizable enough to have a property management company in. And again, one of the things that, I just will reiterate to all our listeners out there is that, whether you're new to the business or not, I think people still continue to underestimate until they get into these conversations with folks that, yeah, you're right, Rod, they are marrying off their daughter. And if you are one of the suitors, and even if you're not the highest bidder, if they know that you're going to take good care of their daughter and they're going to carry on the legacy and do great things with it, and you build that relationship with them, and if you talk with them for months or years, first of all, you're the only one that they're going to call. And second of all, when it comes time to gather the highest and best bids, it's not always the highest bid from an out of state, out of a country investor that's going to come in and win that. It's the relational piece, and I don't think you can ever underestimate what that means. Also, and just the longevity in that. Folks that are just praying and praying and throwing offers out, hoping that something will get done, are not going to find these gems like you guys are finding, because you're willing to take the time and be patient and wait. And even if it takes a year to get that one deal, well, it's one of many that are going to come down the pike that you've built a relationship with those sellers. And so you're going to win in the end for taking that approach and building that relationship. So I just wanted to affirm you in that. And then also just mention that to the folks that this is a long game, and it's a different game than other forms of real estate out there.
Exactly.
It's about patience, right? And relationships, for sure. And it might not happen today, but if you're consistent, right, it will happen in time.
Yep.
And you'll get to where you want to get to. I will say that in my experience, the self-storage owners that I've dealt with are substantially nicer than a lot of the residential owners that I've dealt with. They like to talk, they're proud of everything. But again, a lot of times they're not in the desperate situations that the sellers of the residential, residential properties are when we're there trying to buy their properties. So I guess it's kind of different in that respect, but most of them are really pleasant to talk to and to build those relationships, for sure.
Yeah. Let's talk about the facility itself. Tell us about the physical aspects of it, size and units, and then ultimately, we're value add folks. What did you see in this? Where was the value add, and what attracted you to this to say, hey, this is the right one, and we want to add this one to our portfolio?
So that's a great question. And ideally, this was a little smaller than what we had originally anticipated or wanted, but we thought that it was a great opportunity. The numbers worked perfectly. It's in a great area. The supply index was pretty high, but I called all of the facilities around and they were all full. And our facility was $40 under market rent. So there was a huge potential value add in that. Just to get in there, get our feet wet. We had a great relationship with the seller. They were great along the way. They helped us along the way. We're still in contact with them, still friendly with them. And we saw a property across the street that is vacant that we thought, okay, we can get in here, get our footprint here and start expanding. And while we haven't bought that property, we are now under contract to buy another facility, which is 4 miles down the road, to be put underneath that umbrella, because the facility that we bought, small, it has 61 units. So it's very small. But we've increased the value, I would say probably $140,000 already since we've had it under our ownership, which is great.
August.
And we are running it. Catherine has been wonderful to us and has been very helpful and instrumental in help managing that facility and running it very tight. You don't call her the wolf for a reason, right? She's been fabulous. So we're going to do the same thing with the facility 4 miles down the road, and that one is twice the size. We're right by a military complex. It's growing there. It's surrounded by apartment buildings and mobile homes. So there's really a high demand for storage in that area.
And we also just met with county permits office just this past December on the second unit, and a lot of housing going in there, a lot of construction going in there, and it's a great time to have a self-storage. Again, what's funny is, you learn all these rules of thumb, right? Everybody learns the rules of thumb, but key thing to do is still do your own homework. Like Christin already mentioned, that look, the supply index was high, but we did our homework and it hasn't stopped us. We've maintained a 95% full facility, or Christin has, and we're looking forward to getting this other one up to 95%.
Our main goal is really to build the passive income, right? I know, some of the people we're surrounded with in this group who are just incredibly intelligent and very successful. They want to have the billion-dollar companies, right? It's Rod and I aren't wanting to get into this for ourselves. It's really the lifestyle, for us.
Mhm.
And the ability to have that income coming in, the stable income coming in, and being our own bosses and manage our own time and do what we want when we want,
Mhm.
which is really what's important to us. So when I analyze these facilities, I do look at, the resale potential and how I can increase the
Mhm.
value. But really what's important to us is, what is our cash flow? Does this work with with our goals? And what's the time frame, the return on investment, and when do we get our money back? And if all of those meet our metrics, regardless of the size, then perhaps it works for us. And one of the things is, you can have a standard, I don't want to say protocol, but a standard set of criteria. But Rod and I, our goals are different than your goals. So
Mhm.
what makes it a deal for us might not make it a deal for you. It really depends on what you're trying to get out of it and how you're trying to grow and how you want to get to where you want to be. And that's really what it boils down to, is, do these deals meet your goals and what you're trying to accomplish?
And that is different for everybody, and that is the intrinsic value. We talk about how we evaluate a facility in terms of a market value, and are you buying it at the current value? Are you getting a good deal on it, or are you maybe overpaying a little bit now, knowing that you create value in the future? And the answer to that question is different for everybody, because then there's the intrinsic value. How much cash flow and how long is it going to take to get there? So, the criteria that you just mentioned, that's different for everybody. I guess to point back to the mastermind, one of the reasons why I built this is because we knew that when we filled our funnel up and we had a lot of deals that were coming down the pike, there were some that were too big that we couldn't take them down. And we needed to find partners, joint venture partners, and capital to be able to take these down, or else they would fall off our desk and go by the wayside. And that happened to me once. And I said, I'll never let that happen to me again. And so that's when we created the mastermind and filled it full of people that could fill in all those gaps. And then likewise, if there's a project, a property that we find that it's a little too small or too far away, and it doesn't fit our model, it doesn't mean it's a great deal. It doesn't mean that we can't monetize it, because we can pass it along to somebody else that is in that market, that is looking for exactly that, and it fits their model and their criteria and the intrinsic value that they're looking for in the facility. And so, over the years, just that is what has happened with the mastermind part of our organization. Is we built a community of folks that are trading deals that never make it to the public eye, because everybody's out there clawing and scratching, building relationships, sending mailers out, and getting the off-market pocket deals from brokers that nobody else gets a chance to be able to take a look at. And we're trading those deals within the mastermind to the tune of dozens per year that never make it out anywhere else. And so, and then to have the value in being able to see what that looks like for other folks that are building and scaling versus meeting the needs that you have. So with that, I commend you for recognizing and taking the blinders off to say, hey, we're going to look at anything and everything, because if it doesn't fit our model, then we'll go ahead and we'll find a way to monetize it. And in this case, in this approach, you built the hub and spoke method, but just a little backwards order. You bought the spoke first, and then the hub came just shortly on the heels of it, 4 miles down the road. But it worked. So tell us a little bit about what the management looks like at the two sites now that once the second facility has been purchased and up and running. How will you share the management resources across those two facilities?
Sure. So we got really, really lucky. Like I said, we had a great relationship with the seller at the first one. And I had asked her, I said, is there anybody you recommend that would like to manage this facility? I would probably only need them to come, it's a smaller facility. I probably really only need them to swing by 2 days a week. And it would include, clean outs, picking up money, whatever. I try to have them pay me directly through credit cards and debit cards and all of that. But she has a friend, a retired gentleman, a retired postal service gentleman, and he has been phenomenal. We were really lucky. I feel like our first property was way too easy. It shouldn't be this easy, Scott. The banks were so easy. Not only did we get funding for it, we also got a loan for the improvements on it. The rates were phenomenal. You didn't have to turn everything upside down to give them all the paperwork. The title company was easy. The due diligence was easy. It was just so easy. And I'm like, this shouldn't be this way. There's surely got to be some kind of hook, but that wasn't the case with this one. So we got Ed, who is our manager at that facility, and he is going to manage the second facility that we have because of the proximity. And he has done a fabulous job. We communicate well. We trust him. He's handy. He deals with people well. So we've been very fortunate with that. Right. So offsite, we are a flight away. I currently am in managing this facility. I use Easy Storage Solutions, and I'm taking the phone calls. And I only wanted to do that for first few months for the transition period to get to know the tenants, get everything kind of settled and situated. And I was able to do that. And the same thing with the second facility 4 miles down the road. I will start having either a call center or somebody else take the calls shortly. But outside of that, it's been very, very, knock on wood, easy to manage. And we have not had any real problems whatsoever.
Good. So what are the future plans then for the two? Tell us where, I mean, you mentioned on the first one, $40 roughly a unit below market rate. So that's the upside and the value in that, and a property across the street to be able to add on to that. As you add the second facility, where does the value add come in with that one as well? Aside from just also sharing the marketing and some of the other management dollars, where can you take this one in addition to the other one?
Sure. So like you said, the economies of scale, because we're now operating as one, but this one also has a below market rents, probably about $15 to $20 below market, depending on where they are. He's also operating at a 50% economic vacancy. So this one's going to be a little bit more hands-on and getting everything cleaned up and get it up and running. But the value is there. We are purchasing this at 11 cap, which you wouldn't think that we would. But we are.
Yeah.
He just doesn't know what he has, and he's not managing it properly at all. So there's our value add for that. Neither one of these properties have room for expansion, but the value add component is really in running this more efficiently and effectively and getting the rates up to where they should be.
Well, and then continuing to look around for other facilities to add to it, and or in this case now, you're open to finding, some vacant ground or a building to convert and then annex. Anything else could be added in between this now that you have the two in place as well. So it actually does provide you some more opportunities and ways to be able to add value to these existing two. So well done, perfect.
And we have on our head there. We're looking for some property for RV parking, because there's a demand there.
There's a demand for RV
parking. So we're keeping that in our wheelhouse and in our reach and our sites.
Part of my discussion with the county was, do you have blank land and are you open for RV storage? And they were. Even actually the lady who had the permit off, who runs the permit office, said, I'm looking for RV storage for mine. So I think that's a good sign.
So, we could buy that eventually if we find the land and tap into some of the income off of the RV storage. If it makes sense to convert it to actual physical buildings, then, that's an option as well.
Sure. Yep. Storage began as a land bank, and now the land bank is RV storage, so that you can then put buildings on it for self-storage. And that is typically the highest and best use, as we're seeing over and over again now. So, all right. Well, then deal number 3, where is that in proximity? And tell us a little bit about what that one looks like.
So deal number 3 is Rod's girlfriend. They've been dating for a year.
About a year and a quarter.
She loves him to death. I think she's 75. She just loves
75.
him.
She's a retired teacher.
Yep, she is. That's nowhere in proximity of our other two. It's north of where we are. It's in Pennsylvania. Driving distance, about 3 hours from us. The price point on that one is substantially higher than our other two, but it's in Pennsylvania. The taxes are much higher, the land is higher, all of that stuff. But the revenue is there too. And this one does have great potential for expanding on there, adding additional units. They also have
2 large buildings. They're kind of separated. One is, I think, 120 by 40. So it's basically shelved warehouses that have been used as kind of like a garage, or for commercial guys to store commercial goods in. And then another one, I think it's a 40 by 60 building as well, to convert either into climate control or otherwise. We've had some thoughts. Do we make a Gucci garage? Do we make it, into a large indoor RV for one of these? Because on her land, she's got RV storage right now. But she doesn't really advertise because she likes what she has. It's all controlled. She has plans. She's going to provide us with the plans of where she thought she can expand it. She's done a wonderful job of making this look like a house within a residential area. So the property's well maintained. We plan on keeping the name as huge story behind this. Obviously, I know a lot about the story from the year and a half of talking with her, but we're maintaining it there because there is a story, and it's a story that's grown up with that town. And I think that's going to be key for us as we go along, growing that potential. So that's been really good. She has clients there since 1995. So
our upside with this was obviously expansion, converting some of those warehouses, but also her rental rates were below. However, she has been so kind and has raised the rates for us to pretty much where they should be. So
Wow.
yeah,
Fantastic.
she's like, I'm going to get this up and running for you. So, and I think that kind of goes back in part where the relationship, is key in a lot of situations. Not everybody will be that way, but it's key.
Yeah, she's getting rid of that. She says, I'm going to get rid of the trouble so you don't have to deal with it. Like, all right, I like that.
She's a little pistol. She's great.
Yes. And as a matter of fact, she was just calling us to give me an update on something. So I have to give her a call when we're all done here.
And I'm going to have to find a boots on ground manager there for us as well.
Well, congratulations once again. And again, I think we're seeing a pattern and a theme here, and that is you cannot underestimate the power of building a relationship with these sellers. And Rod, this is very similar to a situation we had with some students of ours, that Sherry and Jason in South Carolina. And there was a facility that they had found, and the woman and her daughter were left this facility when dad passed away. And he left no record of anything. There was nothing for them to run. He handled everything by paper, and it was all him running it. He didn't even have insurance on the facility when he passed away. And so they were given this facility, and they ran it for a little while. They weren't doing the right things with auctions. They were basically doing it illegally and breaking all the rules and laws of lien laws. And so when it came time they answered the mailer that they had sent out. And Sherry just got so frustrated. It was in your position, Christin, of just trying to pull the basic information out. And they were so leery of anybody, and they didn't want to give any information away because it was deemed as personal. And so, she would call me on a regular basis and say, I don't know what to do, Scott. How do I approach this? They won't tell me anything. They don't trust me or anything. I said, and she just loves Jason. I said, well, then send Jason over there. And so Jason would go Sunday afternoon and sit down and have a glass or 5 of lemonades with the gals, and come back with all the information that he needed, and that over and over to build that trust, and then get the information to finally, put together a lender's package so that they could purchase the facility. But, many other people would have just said, this is ridiculous. I don't have time for this, and move on to the next. But they were persistent. They built that relationship, and they won out, and they got a fantastic deal on a great facility just for playing that game. And it doesn't mean that that's the only deal and you have to wait. I mean, you do that with many deals you have in your pipeline. And just like you two have done, then they'll start to fall, and they'll start falling like dominoes, and one by one, they'll start to come into your portfolio from all the legwork and the relationship building that you've done. So once again, I commend you for that. And you get paid for doing that, and for going the long haul, and or going the distance, and just sticking in there with those folks to make sure that they are taken care of and their baby is taken care of.
Right.
Absolutely.
For sure. And it's been a wonderful ride, and it's only going to get better. And, now we're at the point with these, once we buy all of these facilities, it's time for us to level up, because obviously you run out of cash at some point in time to continue to buy these facilities. So we have to step up, and, we just know we're surrounded by just such wonderful, intelligent people in the mastermind community that who are there to help people, and everybody grows with each other. And just because you have a mental block that you can't accomplish this, they can see how you can accomplish this and help guide you, right? To help you see what they see and what they already know. And so for that, we're extremely grateful, and surrounding yourself by wonderful, caring people who are smart and successful, and just surrounding yourself by people where you want to be and how you want to be is just extremely helpful.
It's basically just getting together with your group, Scott, and the guys we know, and together. It's like a huge battery recharger, right? Every time we walk away from meeting up with everybody, it's like, man, what have I been doing? I got off my wagon here. Let me get back on my wagon. Even though I got my stuff going on, there's so much more I forget, because I sometimes get tunnel vision, and you get that extra little push. And again, like it is, we're surrounded by people who want to do things right. It's not the greed. It's not the backstabbing. It's I'm going to help you get your boots on, get out of bed, and get this done. And that's what they are. Why do we stay with these folks? And why do we talk to them so well? One, I like talking to people, I think I already know, but it's the group, it's the community. I'll be the first to say, if I don't like the community, I'll shut down and walk away. And you guys make me stay up past my bedtime every time I'm around. So
you're welcome.
I enjoy it. Plus, I get up in the morning still, as you know.
And we learn so much from everybody. It's amazing.
I've been at this since 2005, and about 10 years ago, we recognized the need for a mastermind. And that was even before masterminds were becoming popular, but following in Napoleon Hill's footsteps. At that time, the first and only self-storage mastermind, and now it's the biggest and filled with the best quality people in the industry, bar none, in the self-storage mastermind. And I am thankful for the folks that come in there. And it's certainly, I'm not patting myself on the back, because I built this because I didn't want to be the smartest person in the room, because I still and I'm thankful because I still walk away with pages full of notes from that group. And I too, even though I am the leader / moderator, I walk away energized, like you said, Rod, and with lots of to-dos, and the energy in that room is like none other. And that's, I built it essentially for myself, but then also for the other folks that were operating as solopreneurs in this self-storage space, that we have a place where we can come to build this community that's all about capital and deal flow, and then doing it better than anybody else. And so you guys are living that and carrying the torch, and just appreciate you having a part in that and being such an integral part of it as well. And then also for coming on and sharing your story with us today.
Absolutely. We appreciate everything. And it's been a wonderful ride so far. And I'm looking forward to what lies ahead.
Getting on the freeway.
Well, if you had any parting words for the folks listening today with regards to your journey, or perhaps anything else, any resources or books or anything else that you've read or listened to recently that you could leave with everyone that may inspire them to go out and do the same, what might that be?
So I guess I'll start. My parting words is just be consistent and be patient, and do what it takes day in and day out. And eventually the results will come. And surround yourself by people who have been there and done that, so that you too can learn from them and grow. I feel like when you're surrounding yourself by the right people with the right mindset, who've had some experience, you will get there a lot quicker, hopefully with some less mistakes, possibly. I don't know. I mean, we're all going to make mistakes. That's how we learn. But tap into the community for sure, and tap into the people who are doing it. They are a valuable resource. Rod, do you have anything?
Oh, I mean, you guys gave us the book Traction. Traction is one that we work towards. As two people working together, it's great to know where we need to go to get some things set up. There's other books that we share. It's funny how when we talk to people, we share the various books. And another one a book that I like that kind of falls within this whole theme is The Slight Edge. That book really brings into why you do itty bitty steps day after day, because that itty bitty steps is a different path, and it may not look like it today or tomorrow or otherwise. I mean, but it will change, and we explain that to our kids. Some of our kids have understood that. I mean, you've heard us. We've done the 75 Hard program. That is nothing but the slight edge in 75 days to show a difference. Those types of motivational or keep on track type of books, if you want to call it that, are just another part of the daily routine. We're starting it up again. Oh, I can't wait to the cold. But those are great books and great advice. You got to stick to it.
Yeah.
There's going to be crappy days. There always is crappy days. We know crappy days. I know very crappy days. You can still get out of bed. It's as simple as that.
Yep.
That's small things accumulate.
Yep. Well, I appreciate that, guys, and your approach and your disciplined approach to the business is what has gotten you to the place where you are, and going to continue to catapult you into the future. So, looking forward to seeing you in Phoenix, as well as hearing about deal number 3 as well. So once again, Rod and Christin Blunk, thanks so much for your time today and for sharing with everyone your particular projects that you're working on, as well as your approach with us. So looking forward to seeing you guys soon.
Absolutely. Thank you so much, Scott.
Thanks, Scott.
All right. Take care, gang. Bye-bye. Hey gang, wait 3 things before you leave. First, don't forget to subscribe to the Self Storage Podcast and turn on your notifications so you never miss another episode. And while you're there, please leave us a 5-star review if you like the show. Second, be sure to share your favorite episodes and more via Instagram, and don't forget to tag us. And lastly, head to the links in the show description and hit the follow and subscribe button on Twitter and Facebook to get a front row seat as we grow and scale our business and bring you along with us. Take care.